The Federal Reserve just cut interest rates by a quarter point for the second time in a decade to 1.75 to 2%. Why? Because Federal Chairman Jerome Powell is concerned about potential slowing economy, the trade war, and the attack on the Saudi oil facility. So what does this mean for you? Cheaper loans and lower interest rates on your savings accounts. If you want to support the channel, please like this video and share it with your friends. So your online savings account may soon lower to about a quarter percentage point less than it currently is. So if you're like the average person and you've got about $10 million in your savings account, that means you're going to be making $25,000 less than you otherwise would. Okay, if you have $1,000 in your savings account, then you're going to be making $2.50 less than you otherwise would on an annual basis. So it's not really going to affect people too much. Now, how does this affect mortgage rates? Well, if you have an adjustable rate, which means your interest rate can change at any time, your mortgage rate may reduce by up to a quarter percentage point. But mortgage rates are influenced by more than just the federal interest rate. It's also influenced by other factors such as how the economy is doing, how the stock market is doing, how the housing market is doing. And so you may see only about half of a quarter interest rate reduction. And on top of that, mortgage rates don't see a quick response like, for example, like savings accounts. So when it comes to mortgage rates, you may not actually see it change until maybe like a year from now, because your mortgage rates are only updated once a year typically. Now, auto loans are different. Auto loans can see a much faster reduction in their rate. So within as soon as a few weeks, you can get auto loan financing for cheaper than what it is now. It can be up to a quarter percentage point cheaper, but it'll probably be, again, even less than that, maybe only half of that. But so that's not really going to affect you. If you've got a auto loan on a $25,000 car, that means with this interest rate reduction, you'll be paying about $1 or $2 less per month. So what about credit cards? Credit cards, you will also see a pretty quick change to the interest rates on your credit cards because those are adjustable, those are flexible. So within a billing cycle or two, you're gonna see about a quarter percentage point, maybe half that reduction in your APR. But the thing with credit cards is that the APR for credit cards is already so ridiculously high. It's typically maybe 18, 22%. So again, a quarter percentage point difference on that, you're not really going to see any difference. So it's not really going to affect you. Home equity lines of credit will also see a reduction in their rate because those are adjustable. Home equity line of credit is when you own a house and you borrow against the equity in your house. So you can expect to see a reduction in that rate in about maybe 1 or 2 billing cycles. But again, since the interest rate reduction is so low, it's really not going to make that much of a difference on your payments. So altogether, this interest rate reduction is not going to mean too much for you as an individual. Now, as a whole, you know that the Federal Reserve also reduced interest rates earlier this year. And so if the Federal Reserve keeps on reducing interest rates more and more, then in the aggregate as a whole, this can make some substantial changes. But if you saw in the headlines, you saw in the news that the interest rates are going to be reduced, it's not really going to have much of any difference on your life.